Nigeria's economic outlook is improving, with the World Bank projecting 4.4% growth by 2027, up from 4.2% in 2025, driven by services, agriculture, and non-oil industries. Speaking at the October 2025 Nigeria Development Update in Abuja, the bank highlighted rising foreign reserves, a stronger current account, and the first decline in public debt in over a decade. However, it warned that macroeconomic gains have yet to ease widespread poverty and food insecurity, urging urgent reforms in food trade, fiscal transparency, and social protection to deliver real impact for citizens. We have Samuel Oyekanmi, lead research and insights at Norrenberger. Great to have you in, Samuel.
Yeah, thanks for having me. Good morning.
Good morning. The numbers seem to be looking good for Nigeria. The World Bank is projecting Nigeria's economy will grow by 4.4% by 2025. How accurate would you say this projection is, and what sectors and stakeholders are driving this growth?
Yeah, I think it's quite apt, right? We already mentioned earlier this year that the Nigerian economy is already primed really for some significant growth, in line with the expectation that we ought to hit a $1 trillion economy by 2030. And if you look at the numbers that have been released so far, Q1 and Q2, we see that aside from the fact that the natural driver of GDP growth has been services, we're already seeing the other areas also improve. We saw the likes of industrial sector record significant growth compared to what we've been seeing in recent history, while agricultural sector has not really seen the level of growth that you would require from a 20% contributor to the economy, right? But again, we've seen those dynamics around that. And then in terms of the oil sector also, we've seen significant growth off of the back of favorable in terms of output production and then international crude oil prices. We've also seen a lot of activities in terms of refining activities on the back of Dangote refinery and some of the other government refineries that have also started operations in recent times. So a lot of things have happened. Again, services sector, you look at the likes of telecommunications, where earlier in the year they approved a revise or an increase in terms of tariff recapitalization in the entire financial services sector, and a lot more still going on even as we speak. So there's quite a lot happening, and I agree that yes, the economy would likely grow even more than 4.4% in 2027, because if you recall, earlier this year we had our estimates at some point in July, August, that Nigeria's economy this year, 2025, is going to grow in the region of 4 to 4.1%. So it's pretty much in line.
So can you boldly say that the $1 trillion economy by 2030 is, you can see it, it's in sight?
No, I definitely can't. But it is not impossible. There's quite a lot of things that needs to be put in place. $1 trillion economy means at this rate where we are, we need to grow pretty much 5 times by 2030. While I say it is not impossible, and that's, again, there's a whole lot of that needs to be done from the government side and also from the private sector. We have recapitalization happening in the financial services sector. We also have things around the tax reforms that is set to start in 2026. But then again, there's also the need for significant government spending to drive the amount of growth that would have both short, medium, and long-term impacts on the economy, and that's a function of political will, which, again, it's always questionable when you look at Nigerian politics. But hopefully, if that is in place, we could achieve that.
Okay, it's looking possible, and it seems more and more possible. Obviously, these World Bank projections, it appears the numbers, the arithmetics are looking good. But there have been a lot of talks that, yes, the math, the numbers, the indices may be looking better, but the human face to these numbers, the human stories behind these numbers are just not matching up. What are your thoughts on, people who say such?
Yeah, and I agree with them, right? Even the World Bank during the presentation had made comments around the 139 million Nigerians currently under poverty, right? And despite the fact that macro numbers look good, it has not necessarily translated into micro gains for average Nigerian. And some recommendations were mentioned, which are also in line with our own view here at Norrenberger, right? One of the major issues in Nigeria is food insecurity. There's issues around regions where food have been produced. Either you have conflict around neighborhoods, herdsmen, farmers attacks, or even the likes of Boko Haram attacks, really. So there really needs to be a whole lot that needs to be done in terms of ensuring food security. Because again, don't forget, an average Nigerian household spends roughly around 47 to 50% of its household income on food. So if you're able to tackle food, you have solved at least half the problem of an average Nigerian. But unfortunately, we still have food inflation very high, which means that a number of Nigerians would have their earnings eroded just as a result of spending on food. So if you're able to tackle that, and that's the function of looking at all the, of course, factors that are driving high food prices. I already mentioned insecurity. Then you look at the value chain from the agricultural, from the farm, even to the point of how it gets to the final consumer, which is the function of logistics, warehousing, transportation, infrastructures around those regions. It's a function of both private and public sector coming together to ensure that those value chain are really buffered, right, boosted, and that would help to drive down the prices. Yes, so I agree. Quite a lot of things need to be done. We also need to start seeing that our money that the government is, of course, collecting from us as form of tax is also working for us. And that's a function of social trust, right? Right now, an average Nigerian does not so much trust the government, even to the point of them paying their taxes. So we need to start seeing that when governments make statements around some policies and reforms, it is not just affecting citizens, they are also pulling their own weight on the other end. I think that would also drive some level of social trust. If you are able to tackle food, I think to a large extent we can start seeing those macro numbers in terms of exchange rates, stability, GDP growth, PMI numbers looking good, foreign reserve over $42 billion. We can start seeing that meaning more to an average Nigerian who just wants to attend to its basic needs, which is basically food, shelter, and clothing.
Those essentials. And obviously building social trust. So again, the numbers are looking good. Inflation, though, some will say it remains high, even though we've seen it temper over the last couple of months, but it's still relatively high. And they're projecting a growth in our economy of 4.4% by 2024. There are those who are also sort of doubting the numbers or not looking at the numbers as being credible. Why do you think this is? And do you see that being an issue along the line? Because yes, you are citing these figures in speeches, these projections, but for some, they're just numbers that they can't relate to and they may not even believe. So is that a problem?
Yeah, I think that's quite interesting, and it's not new, right? Over the years, we as Nigerians have not so much trusted numbers that have been released either by any one of the regulators, and it's probably not the fault of an average Nigerian because the numbers only make sense when it affects you, it affects your life. You would find an average Nigerian who buys something in the market today, goes back next week and realize that it has grown by maybe 30 to 40%. In their mind, it tells them that inflation is around those figures. So you turn, for example, someone is going to tell you inflation is as high as 80 or 90%. But the question still remains that if inflation is as high as 80 or 90%, we might as well pack our bags and start running away. So again, it's a function of educating Nigerians to understand how these numbers work, right? Everything that we have seen so far in the macro space has not been a surprise, right? From the fact that we are coming from a region of the basin, which pretty much shuffles a bit around the components of GDP in terms of sectoral components, and then inflation in terms of the components in the basket, already gives you an indication that we're going to have some of those things change drastically from where we used to be. And then the fact that we had very high inflationary figures last year, just as a result of base effects, the chances that you're going to have those numbers also taper down. Then you also look at the fact that a huge part of that food component for that inflation basket, for example, is food. And we have had as a result of seasonality, right, prices of food have somewhat slowed from what we had earlier in the year and late last year. By the time you pull these components, these factors together, you would understand why inflation would be able to drop from 24% now to about 20%, which is just normal. But again, our regulators, our data bodies really need to do a lot more in educating Nigerians to understand how these numbers come about. I remember a while back, I would always talk to my friends and explain to them that these numbers, these inflation numbers, for example, that you're looking at, this CPI is a function of what they call a price index, which can be calculated using last Bayes and some other statistical formulas, right? So they understand that it's a function of both price and weight and not just necessarily price alone. That educates people and somewhat gives some level of confidence in trusting the numbers. But for me, I think for what we have so far, they are not far from reality in terms, and this is probably because I am someone who is a statistician who understands numbers too and can also speak to that. But as an average Nigerian, you just need to let those numbers translate to their daily living, and then they will be able to have some level of trust in the credibility of those numbers.
All right, those numbers need to come alive to the people. But more good news, there has been a drop in public debt for the first time in over a decade. How did we manage this? What policy decisions would you say contributed to this turnaround? And who within government is driving this shift?
Well, I think a lot has been happening, right, in the fiscal side. As you would see, things around revenues have improved either as a result of the removal of subsidy, for example, which has seen a lot more funding go to the states and local government. And of course, what that brings naturally is that you find that you don't have tendencies to borrow as much as it used to be. And then coming on the back of the FX liberalization, have also seen our FX debt side of things also reduce just as a result of that devaluation. So a combination of all these factors improved revenue from the fiscal side, which naturally we should expect that borrowing would reduce a bit. Of course, there's always going to be borrowing because don't forget our budget is huge, right? But then you have also those windows to pay down on some of your loans that you had initially taken in. So that is also going to an extent reduce your debt. And then on the other end, the FX component of that has also saw a decline in terms of the dollar side of the debt. So a combination of those, right, contributed to that. And I think it is important that we start seeing that also going forward, because one of the things that has been a question mark for most administrations has been debt sustainability, right? So we need to find a way, and which I hope that the tax reform that is going to kick off next year is also going to help pretty much amplify the ability of the government across board, both federal, state, and local, to be able to raise revenue to drive their budget numbers and rely less on borrowing. When we have such a thing, we can start seeing debt levels be at very acceptable range. Our current levels now already looking towards 45%. They don't look too smiley. But then again, we hope that going forward with improved revenue and better fiscal environment, that will get better.
All right. So, I mean, debt is going down. Foreign reserves are going up, exceeding $42 billion. And then the current account surplus is also rising. So what would you say is bringing us to where we are in terms of our foreign reserves and current account? What's fueling the external strength, and how is it being managed? So it's not just a short-term, a matter of a short-term experience.
Yeah, and I think that's commendable, really. On the side of the CBN, there's been quite a lot around the FX environment, and having a conversation around how our external reserve has been able to hit $42 billion. You look at things around crude oil receipts, right? In recent time, we've seen some level of improvement in terms of our output, in terms of production, right? And then again, you bring it back to the fact that the CBN opened up the market to a large extent, whereas they don't have to, as much as possible, have to intervene in the market to ensure that there's some level of floatingness in the market, and you've seen that played around how the numbers continue to change, unlike when we used to have those exchange rate anchored on a particular level. So I think that has also played a huge part. CBN have also been able to attract a lot of FPIs on the back of high interest rate. OMO bills, CBN pretty much have been issuing OMO bills frequently in a bid to attract as much FPI to stable the market, and I think that's good. Right, of course. When you look at it from a helicopter view, you probably don't want those FPIs as much. You probably want FDIs. But then again, it is a win. A win is a win, considering where we are coming from. At some point, our external reserves were as low as 29.30, while net reserves was pretty much close to nothing. So I think it's quite commendable to the fact that we've been able to have some of these FX inflows coming. We've also had importation to a considerable extent also reduced in tandem in comparison to our exports. So of course, trade balance has improved, balance of payments have also improved, and the combination of those things have also played a huge part in driving our FX reserve in recent times. And that, of course, that continues.
I mean, you said a win is a win. But then there are those that would say a win for how long? Yes, they're firing on all cylinders, doing all they can, get the FDI. But there are questions around sustainability. And then those who have come out right to say that where our FX is right now, it's just artificial stability, that there's really nothing strong enough that is keeping the Naira at the levels it is at the moment. What are your thoughts on that? And should we be concerned about this, what some are tagging as artificial stability? Will it be sustained? Is it just, in the meantime?
Yeah, I definitely will not put any word out that's going to make anyone panic, because I don't think that, because again, when you look at the market, it has been stable around that region for so long now. It's about 6 to 7 months, and has even strengthened from that level. And within that period, we've had quite a number of global shocks that has still not necessarily deterred the movement of the Naira in recent time. And for me, that tells me that the market, to a large extent, is fluid enough to handle some shocks as when they present themselves. Is there room for should we hope for a lot more? Should we expect a lot more? Definitely we should, right? So when you look at the components of where our FX come from, you start from trade, for example, import and export. We need to find, and that's why it's a handshake between both the fiscal and monetary side, because the fiscal environment needs to ensure that the business environment is adequate to drive local production to the extent that we don't rely so much on importation. And then we have as much also for export, and that is why the non-oil export component of our trade is very, very important in driving FX sustainability in the short, medium to long term. Then again, you move forward again into balance of payment, look at other things like services. Nigerians still run abroad for education, health, and a host of many other things. Again, a handshake between the fiscal and monetary side. Things around our educational system really needs to be addressed. Things around our health system, health facilities needs to be addressed. So Nigerians should not have so much incentive to travel abroad for basic things that they should be able to get and have access to in Nigeria. And those are things that also take a lot in terms of our expending for either PTAs or BTAs and as the case may be. Then diaspora remittances. Yeah, we have a lot of Nigerians abroad. The numbers are, the likes of India and Pakistan are doing over $100 billion annually. We are still in the range of 18 to 20. Is there a possibility for us to be able to drive that number as much as 30, 40, 50? But it's a function of social trust again. Nigerians abroad really need to see that there is actual value in moving their funds back home Nigeria, not just necessarily for their family members as a means of family provision, but to invest in Nigeria as part of Nigerians. And we need to create an enabling environment. We need Nigerians in the diaspora to also see that the government has the will and capacity to do what is right by its citizens. If you have that kind of environment, the expectation is that diasporans would look towards Nigeria to put in their money, invest, and which will drive domestic productivity, right? And that again, it becomes a circle, because it helps us now to get to that point of $1 trillion economy that we want to see. So when you look at it, it becomes like a circle. At every point in time, one thing is supporting the other. The government is supporting the business environment to be productive. As much as we're being productive, government have a lot more taxes revenue to be able to drive a lot more growth. And then again, we just need that handshake from the private, public, fiscal, and then monetary policy to drive the level of growth that we seek, really.
So everything needs to come together and all at once. You mentioned trade, and obviously we know that actually drives the real economy. The trade barriers, they're being targeted right now, obviously, to ease inflation. Which segments of the economy would you say stand to benefit from, all these barriers, their removal? Are there any particular policies that you think, we should intensify our efforts on? And where do you see resistance likely to come from in terms of trade?
Well, there's been a lot, just as you said, around the trade environment. So one of which I don't think I can get tired of mentioning is the African Free Continental Trade Agreement. I think we have not capitalized as much on that. And when you look at that, it is a function of our industrial sector, right? So the Nigerian economy, from a broad view, is divided into three: agriculture, industrial, services. Services, we seem to do a lot, but you might not have as much to export in terms of commodities from the services sector. A whole lot will have to come from agriculture and industrial. Most of what we do right now is agriculture. In fact, when you look at our trade numbers, by the time you take away the 95 or 94% crude out of that component, you find that almost every other thing there is in their raw form in terms of agricultural sector, except for maybe electricity, which we do for some neighboring African countries. So you really need to start driving a lot of industrial activities. Thankfully, we have seen oil refining gain ground, but there's a whole lot. So when you look at things around pharmaceuticals, things around consumer goods production, I think a whole lot of those sectors in those value chain have a lot to gain when some of these barriers are being tackled. Again, one, in Nigeria, we need to drive capital, domestic capital, into these sectors to be able to drive productivity. Because then again, even when you have the opportunity to say you want to export outside or you want to import, oftentimes the problem we have in Nigerian businesses is that the cost of importing at some point might even be cheaper than you producing locally. And that has disincentivized even local production, because why should I spend more to produce locally and compete with someone who can import at a cheaper cost from Malaysia or China? And that becomes a discrepancy. So there's no incentive for local production. And why is that? It's because some of the factors of production, take away land, look at things around electricity, energy, the cost of raw materials, FX instability, all these things come together to drive the cost of local production higher than the cost of importation. So there is no incentive to produce locally. So it means that while we are trying to deal with those impediments in terms of trade barriers, we also need to start looking at those factors that helps production locally, that would help them also become competitive even in the global market. Because when you produce even at those high costs and you want to export out, the costs outside, they also have to be competitive with other players that you're going to meet over there. If not, you would not have a market to sell. So at the end of the day, it still goes back to the government, right? And then, of course, private sector bring the capital. But before those capitals come in, governments really need to create an enabling environment that gives businesses a level playing field to operate and ensures that they do not have significant high costs, which eventually does not make them competitive in the global market.
And of course, credit is being given to the current Minister of Trade and Industry for efforts in that regard. But yes, a lot is being done. The numbers are looking good. And obviously spending is going up, debt is going down, taxes are being widened, the net is being widened. I won't say it's going up. But then there are concerns that, yes, you're making more money, debt levels are going down, but how do we know where that money is going, how it's being spent? Questions around transparency and accountability when it comes to public spending. Yesterday, we had the conversation about the absence of a budget implementation report, the fact that we're running on multiple budgets at the same time. What are your thoughts on this? And within the government, which institutions and leaders should be championing this and fixing that? So I mean, you also spoke on trust, building trust between the government and the people. If there's no transparency or accountability, how do we bridge that gap?
Yeah, I think that's such a good question, because even during the World Bank launch of the NDU, and that was on Wednesday, the question was thrown to the Minister of Finance and Coordinating Minister of the Economy, right, around why we've not had budget implementation report. And I think that's quite, and these are some of the little things that or erodes the public trust that we seek to have, because when we don't have that level of transparency, we don't know what monies are at what point, at what budget cycle are we, what funds are being allocated to which, and what is being spent on which. It just does not drive that trust, and unfortunately that's where we find ourselves. But again, if we're going to take his words for it, he said they are currently working on ensuring that there's a correction around that, and then those numbers will come out soon. And we hope that that's going to happen, because without that, really, an average Nigerian, especially the savvy ones who are the intellectuals, who wants to know what the numbers are and who wants to know that taxpayers' monies are exactly used for what they ought to be used for, they follow these numbers. I particularly follow these numbers, but unfortunately we've not seen that in recent time, and hopefully that will happen. But my guess would be the Minister of Finance is someone that, because of course he's in charge of anything that has to do with money, both cash flow coming in and going out, so he has to champion it. And then you have things around the budget office. Those are the bodies, that two bodies primarily, that I think should champion such level of transparency. And I also think that at the National Assembly, right, it should also be a subject in that house to have conversations around ensuring transparency, accountability at every point in time. So what we've seen recently is that the CBN on their part have been doing a lot of disclosures, right? In fact, I saw a report, one of these just a couple of days ago, where they released the prime and maximum lending rate for each banks across different industry. And I think that's quite interesting, because what it does is that it helps players in any of these industries to be able to benchmark and understand different rates for each bank, and you have a level playing field to make a choice. Now we need to start seeing that at the fiscal level. Now, if the executive is not going to do that, I think it is on the legislature to ensure that, of course, they are supposed to be a watchdog for the executive to ensure that these are being done. So I think while the Ministry of Finance and then the Budget Office is doing that, the National Assembly should also ensure that they coordinate that is being done. So
the National Assembly,
those are my comments.
National Assembly Wale Edun and Mr. Tanimu Yakubu, head of the Budget Office. We need to see the reports and transparency. Thank you so much, Samuel Oyekanmi, for sharing your thoughts on the show today. Samuel Oyekanmi, lead research and insights at Norrenberger. Thank you.